My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish harami yesterday, but with a twist. It can also be seen as an indecisive spinning top. Actually, I believe the two patterns are, however, unlikely related, as the market rose up to the recent 50% Fibonacci line at 119 3/4 and rejected it, but then seemingly was not sure about the rejection. Below, we still have the two-day pipe bottom over the weekend of the June 2018 high at 118.51 and continuation trend line from the old December 2019 to May 2020 lower diamond upper trend line, which actually is at 118.36. We also have two lesser Fibonacci levels at 118.87 and 118.97. Overhead, we have some free air until the recent 50% Fibonacci line at, I say, 119 3/4. Then above that, the flatlining long moving average, currently 119.99. So far today, a move higher and a possibility of a reactionary bullish engulfing pattern right now. It's not really that surprising given the indecisive spinning top made yesterday. Cable, aka sterling against the US dollar. The third bullish white soldier yesterday, but really it was an indecisive spinning top. Nevertheless, it was interesting as the market opened on the gently rising medium moving average, currently 139.49, and made a sterling effort to try and take on the lower time, currently 140.13, of the hugely significant, if broken, June to September 2020 bullish shift pitchfork. It failed to make it. Not because of just the lower time on its own, no, it was because the lower time had backup in the form of the coincident rising short medium moving average resistance, currently 140.14, and the previously highlighted congestion at 139.99. This was too much for the market yesterday, but it left the door open for another try as the market closed over the medium moving average. All this continues to hinder an idea I'd recently put forward of a possible very large Adam and Eve type double top formed over this year. Now, so far today, well, not that much, but the market continues to sit on top of the gently rising medium moving average. We'll just have to see if there will be any more attempts higher later on, though it does look like an indecisive spinning top right now. Euro sterling. A bearish engulfing pattern yesterday as the market pushed down through and closed below. Support formed of the extension of the flat trend line from the March base descending triangle, currently at 85.45. Well, actually, it is always 85.45. There's also further evidence of the primacy of the recent bear channel, currently 85.28 to 86.17. How it was taken over from the earlier bearish roof stroke half diamond pattern. This morphing does not negate target X as a downside target for the roof stroke half diamond, let's say, pattern in the 85.25 area. Instead, it supplements it. I'm just in two minds as to whether a move down yesterday to the 85.28 level, only 3 ticks away from target X, could be called as having been achieved or not. Well, that's my problem. So far today, a small move up, possibly a bullish thrusting or bullish piercing line pattern right now, maybe even a bullish double. US dollar against the Indian rupee. A combined bearish dark cloud cover pattern and bearish double yesterday, as the limiting force of the 74.40 level still resonates as resistance. The market dropped back and closed below the interesting 50% Fibonacci line of the February to April 2020 move at 74.26, which had actually recently capped the market. It is at this point that I wish to once again remind you, dear viewers and listeners, that I mentioned 3 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as 74.40 area and still keep the bearish incentive. Please note, the 74.40 area is not, repeat, not a target. No, it's a limit to the move higher, if and only if the market wishes to still keep the bearish incentive, of course. So it's not like you hadn't been warned in recent days. Well, so far today, a higher open, but the market seems once again to be capped by that 50% Fibonacci line at 74.26 and looking like a small bearish harami right now. US dollar against the Brazilian real. A lower but still indecisive spinning top. You could look at the last 2 days as a possible tweezer bottom, which wouldn't be much of a stretch to do so, but I'm still not sure on that idea personally. It was nevertheless a new low not seen since June 2020, though not a new low close, as prices closed right on the 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. Overall, it still seems as if the market is moving towards trying to fulfill the 2 previously mentioned bearish scenarios of a large bearish halfway hesitation and a more recent bear flag. We still have target X in the 482.80 area. This is a provisional and preliminary target for the whole mid-April to date action being a bearish halfway hesitation pattern. We also have a possible bear flag action since late May. Potential target X1 for such a pattern will be in the 475.5 area. Meanwhile, overhead we've got a fairly big congestion area between 5 even and 511. US dollar against the Mexican peso. A third bearish black crow yesterday, which was also a bearish closing black Mariposa, and a continued follow-on to the recent bearish Harami. Initially the market tried back up over the long moving average, currently 20.3655, but then dropped all the way down through the medium moving average, currently at 20.2325, plus the highs of early May and early June in the 20 even area, closing down below all of them. With the moves down and then up in June, we are set to make a possible monthly key reversal here. Well, so with a week left to run, if we close next Wednesday the 30th either over 20.2270 or under 19.9470, then we'd be on. Anything in between would mean lesser outside month. Well, right now we've just moved into outside month territory. Now so far today, a higher open but seemingly balking at testing the overhead medium moving average and a subsequent dip down to make a lower recent low a little bit, but not by that much. We have a congestion area below between the flatlining short medium moving average, which is 1999.89, and the 1980 even area. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investors Services International Limited. And here comes the final bit.